Thank you for joining us for another Retirement Defense download. I thought for this video we would talk a little bit about taxes in retirement. And the reason that taxes in retirement are extremely important is it's the one time in your life that you have control over your tax situation. You see, when you're working, you get a paycheck, whether you're W-2'd, they withdraw the taxes, you're paying the tax man every month. At the end of the year, you file your tax return and you may owe a little more, you may get a refund. But when you get to retirement, you actually have to pay some estimated taxes. You don't have a regular paycheck coming in that you're withholding from. You have to determine where is your assets going to come from, or I should say, where is your income going to come from to provide for your needs and pay your expenses. Do you have a pension? Do you have Social Security? Do you draw from a retirement account that you've saved in for years and years and years? Do you have after-tax accounts? Do you have savings in the bank? And each one of these accounts has a different tax implication. But you have control for once. You can determine, hey, I'm gonna draw out of my 401k and I'm gonna pay income tax rates. Or I'm going to take money from my savings account and I'm gonna pay a little bit of tax on the interest that I earn, but at least I have better control. So I thought it would be good to share some things to consider when it comes to taxes in retirement, because it is a very important time in your life. We work really hard for many years to get there, and once we get there, we want to make sure you get to keep as much money as possible. So the first thing you always want to be thinking about is, what are your income sources? Where are they coming from, and what is that impact on your overall tax bill? As an example, Social Security. Maybe you take Social Security at 62, maybe you wait and take it at 70, maybe you take it somewhere in between. But did you know that Social Security is taxed based upon what's called provisional income? And that has to do with all of your income sources. If that particular provisional income calculation could put you in a place where none of your Social Security is taxed, potentially half of your Social Security is taxed, or up to 85% of your Social Security is taxed, which means federally, 15% of your Social Security is tax-free at all times. So we want to understand what is the impact of Social Security and how it's taxed. Now, let's say you have been saving in your retirement account at work. Your 401k or your 403b has been built up over the years and you've got a very large amount of money in there. Most of our clients do. That's where they build up the majority of their savings. And now you get to retirement and you need to take that money out of the 401k account. And when you do that, you're going to have to pay taxes at a marginal tax rate based upon your total income. We want to control that. We don't want you jumping into a high tax bracket. We want to be careful not to take too much money out because it could cost you more in taxes. Now, it's great that you got to defer all of that money over the years and you got reduced your taxable income as you were working, but now that you're not working anymore, we got to pay the tax man. We have to take the money out and we need to take it out efficiently. What about an after-tax account? The government ultimately incentivized us to invest in stocks and real estate by saying, if we buy those and we hold them for a certain period of time, we'll pay a capital gains rate, which is potentially lower than what an income tax rate is. So let's say that you bought a stock in Apple as an example, and that stock is appreciated and it's gone from $1,000 to $10,000. When you go to sell that stock, you're going to have to pay capital gains on the gain that you have, the $9,000 of growth. That might be a more efficient way to provide for your income in retirement than taking money out of your 401k account. So these are the things that we're looking at, and why I always tell everybody, when you get to retirement for one time in your life, you finally have the ability to control the taxes that you pay. So we want to be as efficient as possible so that we can keep as much money in our pocket and give as little to Uncle Sam as possible. There's an old saying, if you actually write the word the IRS on a piece of paper, it actually spells theirs. And that's the funny thing. They have their hand in your pocket as well, but we want to make sure that you can keep their hand out, or at least only let them take a little bit of it. So thank you for watching another Retirement Defense download. Hopefully we can assist you with your tax saving strategies in the future. And if we can help you with anything, our contact information is below. Give us a call, schedule a time, check out our website. We'd love to visit with you. And if anything, just subscribe to our YouTube channel. We always have great videos coming out, good content on a regular basis, and that way you'll get notified when those new videos are posted. Thanks again. We'll see you on the next Retirement Defense Download.